What's going on, guys? So in this video, we're going to be looking at how to draw a trend line properly using top-down analysis. So right here, we're going to start on the monthly time frame. We're on GBP JPY. So we're going to look at trend lines on this pair right here. So we're going to start on the monthly time frame because, as stated previously, we want to get an overall framework of what price is doing on a larger scale. So I'm not going to worry about any of the things over here. This is 1997. You can see at the bottom of my screen. I'm not really concerned about what price has been doing in the past from this far long ago. Before 2000, it's just not relevant to what current price is doing. So right here, I'm going to draw my trend line. I'm going to draw it at the wick of the candle. So these are the wicks. These little white lines right here are the wicks. So I'm going to draw it at the top of this wick right here, and I'm going to draw it all the way down here. And you can see clearly, we can go ahead and adjust this a little bit. You can see clearly that there's two rejections with this trend line. A trend line needs at least two rejections. I can't just simply draw a trend line from this wick out to here because there's no second touch. There was one touch there, but there's no other touch. This is an invalid trend line. Your trend line needs at least two or more touches. So right here we have our outer framework of this pair. Now let's look at the bottom half. So I can draw my trend line from the wicks down here. So I'm going to connect this wick. You can see very easily the framework of price action right here. We have a very simple view of what price is doing. So now we understand from a larger scale the range at which price is in. So now let's go ahead down to the weekly time frame. So for example purposes, before I move on to the actual analysis from top down of current price action over here, let's look at some examples on the trend lines. So I'm going to go over here, use my tool for trend line. You can see right here. So let's just do an example right here. So we can see the trend line defines the trend. So you can see clearly this is an uptrend. The trend line is defining this move right here. This is determining the uptrend. So you can see when we have a break of the trend line, the break of the trend, we have a fall right here, which is a new trend because it broke the previous trend, started to form a new one. So we can use that to help determine our entries if we wanted to get a part of this. So I see this break and I'm saying, okay, I know that price broke the trend. Let's see if it can have a move down. So I would look for lower time frames to see for entries. Let's look at some more examples. You can see right here's another example. Draw the trend line right here to the top of this wick. We have one touch right here, two touches. It's the valid trend line. Price broke above impulsively, broke up, and it broke this trend. This is a downtrend on a smaller scale, downtrend. You can see it broke up and started to form a new trend. So you can clearly see what price is doing right here when you add these trend lines in because it gives you a framework of what price is doing. Rather than when I didn't have those on, it was kind of a little more confusing. So let's move on a little more over here, which is more recent. After this downtrend move, I can draw my trend line right here. Let's adjust this a little bit and I'll zoom in. So you can clearly see I want to draw it to the wicks. We have a rejection, rejection, rejection. So on this downtrend move, when price broke above, it started a trend upwards. It started a little more consolidating, a little more tight, but you can still see the trend change from continuing to go down. We started to move up. And so let's take this trend line off for a moment. So now knowing what we know about impulses and corrections, we can see this is the impulsive move. We can use our trend line to define patterns, which we'll discuss later on in the course. But you can see this correction is outlined with this trend line. And this forms a corrective pattern. So you see I put these on my wicks, the trend lines. So this is the impulse, this is the correction. So by using my trend lines, I help define the parameters of the correction or the pattern to help me get involved in this trade. Because now that I have the parameters of this correction, I can understand where I can look for entries, where I can look for, because I know that this is a continuation pattern. So I want to take part in the continuation of the move down. So by putting these trend lines on, it gives me an idea of where I can look to enter and so on and so forth. So let's move down to the daily time frame. Let's look at more recent price action. Doing our top-down analysis, we have our parameters. Now let's start to look more for more recent, more current trends. So this is more current trend right now. So let's use our trend line. We can define this uptrend movement. So you can see clearly rejection, rejection, and now price broke below. So this uptrend move Now it has broken the trend line, and it doesn't automatically mean that this trend is going to be changed or it's completely going to go down 100% sure, or else everyone would be millionaires trading this way. But it gives us a good idea of where price could potentially go. So now that we know that price broke this trend line, we're seeing if we can find any indication that price could continue to move down. So let's go to our 4-hour time frame. So now you can see this is where we broke out. Let's zoom in a little bit. This is where we broke out. So now I can see, using my trend lines, that we formed another correction. This is just on a smaller scale. So I can define this correction with my trend lines. I'm going to go ahead and move this one over because it's not relevant right now. So you can see clearly we have another correction that formed. And if you want to go even deeper, if price hadn't made this move yet and we were still sitting right here, let's go to the 1 hour. We have an impulse and correction on a smaller time frame inside of this bigger correction. You can see right here, using my trend line, I'm going to drop from the wick to this wick. Same thing on the top. You can see this was the impulse move down. This was the correction. So I could have looked to take part in this trade right about here, because I know that this is impulse, correction, and you can see clearly price broke out impulsively. So we have a bigger correction, and then we have a smaller correction. That's why it's important to do the top-down analysis. This is where I would have looked to enter, because we're on the 1 hour, I want to look for entries. So I've defined my overall parameters. Let's go back to the 4 hour. I understand that we're in another correction, which I can look for a move down. And on the 1 hour, I saw a place where I could have entered right here on a correction, because when we're looking for corrections, we want to look for entries because we understand that price could be going a certain way based on overall structures. So we go back to the daily, and now we start to compile all this together. So we have it broke out of an uptrend. So there's one piece of evidence. We formed a correction. There's two. We went down to the 4 hour and the 1 hour, and we found a correction inside of our correction, which eventually led down to this impulsive move. So that's how you do top-down analysis using trend lines. Let's go back and look at it from a monthly perspective. You can clearly see how our trend lines give us a more clear picture of what price is doing. Right here, correction, broke out, formed a new trend. We have another trend that formed. I'm going to delete this. Another trend that formed, which was an uptrend, and price broke down and started to form a new trend. And then we have an impulse correction, move down, and that's how you do our top-down analysis. So I wanted to take these off to show you how much more harder it is to see what price is doing without these trend lines. When you have these trend lines on, look how much clearer price action looks. You can clearly understand what price is doing. It's moving from a downtrend to an uptrend, helps us form our patterns, which help us in our corrective phase to determine when we can enter a trade. So that's how you do top-down analysis using trend lines. Thank you guys for watching. I'll see you guys in the next video.